At the end of the video, there is a free gift for you. It's a quality business plan template that will guide you through the whole process of starting a business and ensures you start on the right foot. Starting a Forex trading business requires careful planning, education, and a solid strategy. Here's a step-by-step guide to help you get started. 1. Education and research. Before diving into Forex trading, educate yourself about the foreign exchange market. Understand the basics of Forex trading, including currency pairs, market analysis techniques, risk management, and trading strategies. There are numerous online resources, courses, and books available for learning. 2. Define your trading strategy. Determine your trading style and strategy based on your risk tolerance, financial goals, and time commitment. Decide whether you want to be a day trader, swing trader, or position trader. Develop a clear plan outlining your entry and exit criteria, risk management rules, and profit targets. 3. Select a reliable broker. Choose a reputable Forex broker that suits your trading needs. Look for brokers regulated by respected financial authorities to ensure the safety of your funds. Consider factors such as trading platform features, spreads, commissions, leverage, and customer support. 4. Create a trading plan. Develop a comprehensive trading plan that outlines your trading goals, risk management strategies, and trading schedule. Your plan should include criteria for selecting trades, position sizing guidelines, and rules for managing open positions. 5. Practice with a demo account. Before risking real money, practice trading on a demo account provided by your broker. Demo accounts simulate real market conditions without the risk of losing capital, allowing you to test your trading strategy and gain experience. 6. Start small. When you're ready to trade with real money, start with a small amount of capital that you can afford to lose. Avoid over-leveraging your trades, as it can amplify both profits and losses. Gradually increase your position sizes as you gain experience and confidence. 7. Implement risk management. Protect your trading capital by implementing effective risk management techniques. Use stop-loss orders to limit your losses on each trade, and never risk more than a small percentage of your account balance on any single trade. Diversify your trading portfolio to spread risk across different currency pairs. 8. Continuous learning and improvement. Forex trading is a continuous learning process. Stay updated on market developments, economic indicators, and trading strategies. Analyze your trading performance regularly to identify strengths and weaknesses and make necessary adjustments to improve your results. 9. Manage emotions. Emotions can influence trading decisions and lead to impulsive actions. Stay disciplined and stick to your trading plan, even during periods of market volatility or losses. Keep emotions such as fear, greed, and FOMO, fear of missing out, in check to maintain a rational approach to trading. 10. Compliance and regulations. Familiarize yourself with the legal and regulatory requirements governing Forex trading in your jurisdiction. Ensure compliance with tax laws and reporting obligations related to trading profits and income. By following these steps and staying disciplined, you can start a successful Forex trading business. Remember that Forex trading involves significant risk, and it's essential to approach it with caution and a realistic mindset. Thank you for watching. As we conclude the video, go to the description below this video to get your free business plan template gift. It will guide you through the whole process of starting a business and ensures you start on the right foot.